Good morning, good day, colleagues, and everyone else around the world, and a special greetings to the subscribers who have subscribed to my channel since I started, and also those who joined recently. I welcome you all, guys, and I hope that you already found what you've been looking for, or you are on the path to find it, or you will find it sooner or later. If you stick around, you'll find everything that you need to trade. So before I do anything here, I just want to take this opportunity, guys, and say I appreciate your support a lot. Thank you so much, guys, for being here always and watching the videos. The comments I see, sometimes there are no comments in the videos, but on my Telegram, yeah, you guys are flooding my my Telegram with comments, of which is usual anyway. I appreciate that, and I'll never get bored to answer you. So, to cut the long story short, this is where we are now. We are at 773 subscribers. I promised you that when we reach 1,000, I will make a free Zoom for everyone again. So I'll announce it 2 weeks prior to that. So we are now sitting at 773. So tell your friends to tell their friends and their friends and their colleagues and their friends and their colleagues and their families to come and subscribe to our channel for some great content. As you say, you have some great content here. So let's not be selfish. Please, let's share with other kids, as we normally say in South Africa, share with other kids. So yeah. With that said, guys, today I will not be doing V75 or Nasdaq as usual, but today there's something I want to show you on gold. Please do subscribe if you haven't, and then we'll talk about some of things at the end of this video. Please, I'll urge you to subscribe or to like or to comment anything on the video after you watched it. All right, so now this is what I want to show you on gold, how to trade gold, guys. I once said that I used to trade gold like nobody's business. Unfortunately, the broker that I used, then it manipulated the gold. So hence I went to V75, because V75 is not manipulated by anyone or anything. So gold is one of the things that's moved by what's happening in the world, and then especially if the superpowers are fighting each other, so it affects the price of gold. So that said, let's get to it then. Please don't forget to subscribe, okay? Yeah, so now I'll start on monthly time frame. There is something different when you start to trade on a monthly time frame as compared to, let's say we start on M15, and then we put our chart, then we leave our chart like this. What are you gonna see on M15? Immediately, when we are here, we say that gold is bearish, and then why do we say gold is bearish? Because we have this break of market structure here in a bearish direction. So automatically gold is what? Gold is bearish. Okay, then let's look then before no, after this break of market structure. What do you see? This move that broke the structure, the confirmation point where it broke the structure, is also a liquidity grab of what? Of this structure here. All right, it's a liquidity grab of what? Of this structure here. So then what do we expect? Are we going to sell or are we going to buy here? We don't know yet. Why do I say so? Because the high time frame overrules the lower time frame always. So What then do we do? We have to go to the higher time frame. Let's check the higher time frame and find the possibilities of gold. All right. So on monthly time frame, where do we see a structure that has been respected or not respected? Now I see this structure here. All right, I see this structure. I see this clear break of market structure here. All right, so this is a clear break of market structure. So we know what to do after the break of market structure. All right, so now we have a high that we expect price to come and trade into it. This is the high here. All right, so what do we have here? What were we supposed to have? We're supposed to have a break and a retest immediately. And then why should we have a break and retest? Because this is a higher time frame, and then again the break happened on the bullish direction. The reason why we have a break and retest, and the reason why we have a confirmation of a break and retest, is because the direction where the structure breaks into, it is likely to be supported by the next move, especially if it's on a higher time frame. So there I just gave you some notes there. So the break of this bullish structure on a monthly time frame, so we're expecting a retest here, and that did not happen. And even here too, it did not happen, but we have this swing low here. So then why did they push the what why did they push the price to form this swing low here? So whenever I say they, I'm referring to the big boys on the other side, the institutions, the banks, and all those who have the billions of dollars to pile in the market every day. Remember, trading forex, it's a $3 trillion daily market. So in that $3 trillion, you have to take what you can get. All right. So those people on the other side, I think it's 3 or 6 trillion US dollars. That's the money that's circulating every day international. So you can see that if ever your account is $100 and then you want to make a million within a day, somehow I don't know. Anyway, we are not there. So on monthly time frame we see this, and then again do we have another break of market structure? So this is the break of market structure again here. So I did teach about how to find out the clear break of market structure in the previous video, so I'm not gonna repeat those. Yeah, so this is the break. This candle is a clean break of market structure, so we expect a retest. And then where do we then expect a retest? In the internal high. And then if you don't know what's the internal high, please refer to the previous video again. And then in that internal high we find the move up, and then this is the internal high here. All right, is the internal high here. Let's see which time frame are we having. Okay, we have all, and then I guess here also we, all right, cool, we have all. Okay, so fine. Now we have this break of market structure. The retest did not happen here. The first swing low, and then the second swing low. And then how then were we supposed to push price from here to come in to go and break structure here? Remember, this is a monthly time frame. I'm showing you how to see these things in each and every time frame, though I started on a higher time frame. So now we need to have a confirmation of the direction of the structure. And then what is that confirmation? The confirmation of a structure is the break of the market structure into a certain direction. Okay, the break of the market structure in a bullish or bearish direction, while the current price action was bearish or bullish. That's a confirmation of a buy or a sell. All right. So with that said, we have a high, we have a low, and then we have a high again. There's this mistake that you say that this is a high, this is a lower high, and this is a high low, this is a lower low. Okay, this is a lower low, yes. This is a high, yes. But how do you know this is a lower high, this is a higher low here? We cannot confirm that this higher low. We cannot confirm that this is a high, this is a lower high, this is a higher high, this is a higher low here. No, we need to wait for price to come and break here first. Yeah. So now we can confirm that we have a high, higher low. No, we have a high, we have a low, and then we have a higher low, and then when price breaks here and close below that, then we have a lower low now. Not just to say that we have a high and then high and then a high and then a higher low, and we have a high, we have a low, and then we have a higher low. No, the structure is not broken. The structure is not broken yet. So this is a high, this is a swing low, this is a swing high, this is a lower low. Then we change when the structure breaks here. Now this is no longer a swing high, but this is a higher low. All right, I guess it makes sense. So now, if things are like this, what do we look for? We always go to the lower low, always, or go to the lower low of every structure. Mark that down. Always go to the lower low of the recent structure. So the lower low of this structure that got broken here is this one here. All right, so this is the lower low here. So in order for us to continue selling or buying, will be directed by price if it does not break this low again, but it has to break this high in order for us to change the trend. All right, remember this monthly monthly time frame. So we need to wait for price to move from here and then break this structure here. Okay, so as you can see, that did not happen. But what do we have? We have this swing high, and then we have this lower low here. All right, but before that, we have this low again. It did not take out the previous low, and then we have a high that did not take out this previous high. Then now we have a low that took out this previous low, and then we have a high that failed to take out the previous high. Then we have a low that take out the previous low. Then we have a high that failed to take out the previous high, and then we have a low that took out the previous low. So in order for us to buy gold, if ever we're trading on monthly time frame, we should expect price to move from this low to break this high here. All right, so we will expect the break and retest here. All right, so that did not happen. Then we had this low here that took out the previous low. So what then do we expect? We expect price to break here. So we have a break and retest, and then it moves up. Then that did not happen. And then here, what do we have? We have a low, we have a high. So expect price to break here and then retest and then push aside. Then now, let's see then what happened now. Then we have this low, we have a high, and then we have a low here, and then we okay, we have a low and then we have a high, we have a low, we have a high, and then we have a low again. So let me show you something, guys. Let me show you where do we have the change of character here. So this break of market structure here, by this candle, by this bearish candle, this is a clean break of market structure. Also, some of the break of market structures which are not clean, which I do not use, but since we are on a higher time frame, so I can refine those things to a lot lower time frame, so we can see the break of market structures. All right, so this low was taken out by this new low here. All right, so where does this low comes from? Where did it all start? This low, it started up here. All right, so now we have to mark this here. We have to mark this. In the meantime, we can leave it here. So then what do we expect now? Expect price to trade above this high. So once price trade above this high, so now is a change of character. Instead of bearish, now price is bullish. So as you can see here, now price is bullish. All right, so now this change of this change of character confirms that price is now bullish. All right, so we have a high, we have a high, we have a low, and then we have a higher high here. So then where do we expect price to trade into, so that will take a buy? We again, we go to an internal high, and then our internal high, this is our internal high here. All right, this is our internal high here. So we expect price to come to this candle. We do not expect price to trade below this candle. There's absolutely no way that price will trade below this candle. And then here you can pile lot of dollars, because we are definitely sure now that price will push up. And then why do I say that? I just explained it. This high formed this low, and then it pushed price back again, and then it formed an internal high, and then it took out the liquidity that was left here, and then it took out the liquidity that was left on this sell here, and then again, uh, before they broke the structure, then they left an imbalance between this week here and then this week here. So all those are confirmations that price will come back to this candle here. So what do we do? And then we drag this to our right hand side. I always say to my colleagues in the mentorship channel that do not remove your order blocks until they are mitigated. It's either once or twice, but do not remove your order blocks. All right, so as you can see here, the first test of this order block happened around August there. All right, 2016. Then the second test happened in July 2018. So can you see how long that took? And I always say another block will always be respected. It's either today or tomorrow or next year or some years to come. Another block will always be respected. So price came exactly to this candle, and then you ask yourself now, we are told that another block is the last down candle or last up candle. This is the last down candle of this break of market structure. But again, you need to keep in mind okay, this is what I say only in my mentorship channel, but I'll say it here for you guys. Always use a candle that has more body than a wick as an order block. Always use a candle that has more body than a wick as an order block. All right, So if ever you are trading the order blocks only, you have no idea what's an internal high, uh, what's an internal low. So still you'll be looking at this candle as an order block, but so price did come to it still. So you're still on the money here. All right. So this was not gonna be used to push the price high. Okay. So they push price to this internal high. Then look what happened after that. Hence, they pushed price to break. Uh, okay, before they mitigated this, they formed another internal high. Yeah. So they pushed price from this, then they mitigated this. Then now this is invalid now. Then they push the price high to break this internal high, and then again they they broke the macro structure. Remember again, a micro and a macro structure, and then the break and retest. So price will not retest here. The importance of the week again. So price will not retest here, but price will retest here. As you can see, price has been dancing inside it, and then is now pushing up. So all this happened on monthly time frame. So then on weekly time frame, um, let's see what we have. Remember, we already have the we already have the direction on a monthly time frame. The direction on a monthly time frame is that gold is bullish, and then again, one of the things that's controlling gold is the conflict between Russia and the Ukraine. So now some countries want to be partners with Ukraine, but they're afraid. And then the Russians and the Indians, they signed a deal to trade with their own currency. So if they trade with their own currency, remember India has more than 1 billion people, and then Russia is one of the largest countries in Europe. So they weaken the euro and the US dollars. So hence we had these weeks here, all these cells here. When the Russian government released a statement about saying that we will not trade in euros or US dollars, and now they opted for gold. So these are the notes for those who trade the fundamentals, those who trade the news. So the moment they said that we are thinking of trading in between ourselves using gold, then they move from here. I was not watching this, I did not see this, but I believe that move happened from either here or from here. So now gold gained power. So that is why I don't trade these things, because you always need to follow the news. But if you trade the way I trade, then you know that the news follow your setups. Your setups do not follow the news. I once said this, and then someone said it's controversial. They don't understand it. And then I said, if ever you mark your order blocks and the imbalances, then definitely price will come to respect it and then push higher from that. Anyway, we're not discussing that. So this break of market structure, it says what? This structure has broken bullish direction, then gold is bullish. So on weekly time frame, and then what do we have again? So I'll be a little bit quick now, because I already explained everything there. All right, so I'll be quick a little bit. So again, when price was coming to this to this internal high here, we now know, we are definitely sure that we have an internal high here. So expect price to push from this internal high up. So the time price came to the last candle of the internal high, notice what happened then. There's a liquidity grab of the left structure. All right, there. So we are having that now. So after this, what do we have? Remember, this market is bullish. All right, so where does this low comes from? It comes from this high here. So what do we do? This is what we do. We take it like this, yeah, like this, and then we drag it to our right hand side. Let's change the color. uh, yeah, magnet is fine. So now this is our entry for a buy. This is our entry for a buyer. So however, we see price respecting this and then coming back to retest the bullish order block again. However, the main goal is to buy gold on above this order block here. All right, so this you do not have to trade because below here there's nothing that will push gold on this time frame. Remember, I'm saying on this time frame. Okay, so whenever gold comes down here again, we need to look what do we have on the left again. So we now have this fail of market structure here. All right, so this is a fail of market structure in a bullish direction, but it's coming down to it's fail of market structure. It failed to trade above the order block of the bullish direction. So now gold it tends to be bearish while the bigger time frame is bullish. What then do you do? Look then now, what did this respect? What did this last down candle trade into? On the left, immediately here, what do we have? We have this structure here. Let me use this trend line. We have the structure that was broken here. All right, yeah. We have this structure that was broken here. So yeah, we have this structure that was broken here, and then this low failed to take out this previous low here. So what do we have? The very same thing that we have here, just that this is smaller version, but it's important. As small as it is important. This is the low that failed to take out the previous low. All right, so what do we do if things are like that? We take the last up candle that came from this previous low, all right, that closed the structure and then changed the structure to be bearish. All right, and then it also failed to do what? To break this previous low. And then where's that candle? The last up candle from this structure. It's obvious, it's clear, it's this one here. So what do we do? This is what we do. All right, yeah, this color is fine. This is the last up candle from this structure. All right, so we do things like this. So this is where the initial entry for a buy on gold was. And then after that, what do we have? Remember, this bullish candle did not close here. Don't make that mistake. It closed on this open of a bearish candle here. So now I'm going to delete this one. It must show only on on weekly. It must show on monthly only. Yeah, it's fine. So now things are like this. All right, so this did not touch here. I don't want to force things. I don't want to pull it just above here to make it touch this week here. No, that did not happen. So this is what we are having. Remember, still we expected price to trade to break and retest this order block here. And then what do we see still on that? It's here. The structure broke and retest, and then it pushed higher again. So I always say, do not move your order block until it gets mitigated or broken. All right. So now again, let's come back to this here. Why did the price push down here? Remember, one of the characteristics of an order block is that the previous candle must be engulfed by the opposite candle. All right, that's one of the characteristics of a valid order block. The previous candle must be engulfed by the opposite candle, and then once the previous candle is bullish, then once the opposite candle is bearish. Did it engulf the bullish candle? Yes, it did. Hence, they move down here. All right. So now we are on weekly time frame. All right. So price is currently inside the bullish breaker block. All right. So remember, monthly is bullish, weekly is bullish. Now let's go to daily time frame to find something very, very, very good, something very interesting there. So now on daily time frame, we now understand why we have this week here only on daily time frame. All right. So this week here came to mitigate this order block here. So this is the break of market structure, and a clear one, a very, very clear one. All right, this is the break of market structure. So the last down candle is here. The last down candle it's here. So now we put our rectangle to here. We'll have a different color. Yeah, like this. So that is why we have this move down. Colleagues, there's no sudden move or a random move in the market. Every move matters. Every move it matters in the market. Okay, every move it matters in the market. And then now remember this on weekly time frame. So still, even if we refine to a lower time frame, we see the bullish candle being engulfed by the bearish candle. So that's a confirmation that this is a very, very valid order block. One of the reasons why we should consider this as valid or invalid. And then there's something else again here. So I explained these things, how to see a valid order block. Okay. So again, we have these two swing lows here, and then price is currently in the bullish order block. Remember, monthly is bullish, weekly is bullish, and daily is bullish. And then we have these two swing lows here. And then why do we have these two swing lows here? Let's look on the left. What do we have then? All right, inside this order block. All right, we now have a break of market structure here. All right, we now have this break of market structure here, and then before the break of market structure, no, not before, after the break of market structure, what do we look for? We look for an internal high. And then where is that internal high? This is the internal high, without a doubt. this is an internal high. So now this internal high is important to push the price high again. All right, so let's make sure that we do not oversize this wick here. Yeah, exactly here, from the open to the close, exactly here. That is why we have these 1-2 weeks down. There's no random move in the market. There's no such thing. So these 1-2 weeks came to respect what this internal high. So should price break this, and then we will need to look for the nearest internal high after this internal high. All right, so of which we do not expect that thing to happen now. Should price break this, rather it will come down to mitigate again where this week mitigated. All right, um, it will come down again to mitigate what this week. In fact, it will come down to mitigate this week. Why this week? Why not this or this or this? Because this is a high. This is the lowest point from this high here. This is the lowest point from this high, and this is the highest point. This is the highest point from this lowest point here. So price, if it breaks here, it rather come here, and then it will not go below this. So now we know that monthly gold is bullish, weekly gold is bullish, and daily gold is bullish. So now what do we look for? We look for bullish opportunities. And then where are we gonna find those entries for a buy? Now I just zoomed in just once. I want to show you where to find the entries for a buy. Now this is what you do. We are on daily time frame, right? Then you mark this break here. This liquidity grab is important, and then on a smaller time frame is something else. This liquidity grab here, and then you go to the highest point where this low is coming from. All right, this is the highest point. All right, this color is fine. This is the highest point where this low is coming from. So what then do you expect? We expect gold to break this retest and then pushes high again, and then as gold pushes high, this will be the next take profit. All right, that will be the then next take profit, which is, let's see, 2070. Yeah, 2070 will be the take profit only if gold breaks and retest here. So we are taking these buy opportunities from daily time frame. Now we're gonna refine this and then try to see if we cannot find anything here to help us push price a little bit high. So yeah, we are now here. So we need to find an entry on this. We need to we expect this to be the breaker blocker. This is not a tradable order block. All right, so these are the stuff that I always say to my colleagues in the internship channel, that we have a tradable order block and we have a non-tradable order block. Okay, so now on H4, when you zoom out just once, we see a little bit different again. Then what do I mean by that? Uh, Now I need to take some things out here. Alright, I'll do that just soon. We now have this break of market structure here, and a clean one. Remember, gold is bullish, so mark only the bullish break of market structure, while the bearish ones are just a liquidity grab. There I gave you something again. All right, so this week here, it's so important. This extended week here, it's so important. Hence price had to come from the all-time high to come to uh where this week started. It started yeah, let me show you. Do you see now that price came to this week? Oh, I thought we were on Zoom. Yeah, yeah, yeah. So price came to this week here, one, two, and then it started to move up. All right, so still we expect price to break here, and then we will take the buy opportunities. All right, on D1 we expect price to break here. So on on um on H4 or on H4 we have, what do we have on H4? What do we have on H4? Okay, we have this high here. All right, this is what we have on H4. We have a low and then we have a high, so we expect price to give us a fail of market structure here. Why do I say fail of market structure? I don't expect this low or any low that will be formed after this to come and take out this previous low here. So however, should price give us only this as a fail of market structure, so what do we expect? We expect price to move up, and then after price it moves up. So this candle that was responsible this candle is the last up candle from this low here. All right, and then the next candle is that structure that failed to take out the previous low. So the very same candle, we mark it as an order block, and then where's that candle? Is this one here. It's the same thing that we did on daily. So expect price to break and retest there, and then when it gets there again, it breaks and retest. So that is all I'm expecting on gold, colleagues. So in order for you to have a perfect entry, then use your favorite time frame to take your entries. And then in my channel we use M15, so you can use H1, M30 or M15. That's entirely up to you. I cannot dictate that for you. And then as I said previously, remember I marked this, and then now again we have a break and a retest here. Okay, so this is a liquidity grab, and then this is a change of character. So what do we expect? The moment you see the change of character, we expect to buy from where that change of character happened, and where did it happen? On this high here. And then what do we do? We mark that high like this, yeah, to this week here. Remember, we don't have to rob, because on back testing it might be easy to rob you guys, but on the real on the live trade it won't happen. So I have to put exactly where the order block ends. And then now look, we have this week down, and then you ask yourself now, does it mean that we are out of the trade? The change of character happened there, so we have to take this candle. So does this mean we're out of the trade? Remember, after the break of market structure, look for an internal high or internal low, and then in this instance, where is the internal high? Because price was going up, this is an internal high. So what do? We do this. Look now, this was just forming liquidity while respecting this, but in the next move this is just liquidity, hence price respected here, and then it pushed up again. So all this, guys, is it's a simple thing. Like, you need to practice this more and more daily. And again, I will say this. Do this thing on one pair or one indice or anything that you trade. Focus on it alone. The maximum, let whatever you're trading be two. Okay, if you can trade only two things, then you might be okay. But to focus on one thing is the best. Trust me, guys. To focus on one thing is the best. All right, so now there's something else. Again, the bonus thing I can give you guys is that we have this structure here, and then we have this low that failed to take out this previous low, and then where does this low comes from? Comes from this high. So what do? We mark this high. So what then now? From now, we expect price to break and retest it and then pushes up. So this is where you can start to take your entries, and then you can also go to M1 if you like. But I will end this video here. I will not go to any other time frame. I will end this video here. So this is all I wanted to show you guys. I did not pre record this. Just that gold is one of the simplest things to trade. I used to trade it, as I said before. Unfortunately, my broker manipulated it, so it's one of the simplest thing to trade. So if ever you want to trade this concept, forget about the news, forget about who's saying what is for, forget about the oil news that this country, the country X have much oil, country X have much gold. Forget about those things. Just come to the chart and set up your trades like this, and then you'll see how things will work out for you. All right, guys, so yeah, that's it from myself, Njabulo. Thank you guys so much for watching my videos, and thank you for subscribing, and tell others to come and subscribe as well. I will serve this great content. And then the last thing, for those who have been asking me um, how much is my mentorship fee, and then for those who will subscribe, for those who will watch my videos for the first time. So this is what I drafted, guys. So this is what I charge. Let me just read it for you. Is Virgo FX trading $500 for lifetime. What do you get there, and what do you do? You get the V75 analysis, and then here and then I do the Nasdaq analysis, and then we have one Zoom per week. We have one Zoom per week, but after you joined, you and I, just the two of us only, have a one on one. All right, for the first time. Before you join the Zoom for the entire class, we have a one-on-one where I do the top-down analysis with you. What I just did here, and more. It's obviously there's more. So the top-down analysis of whatever you're choosing to trade, but I prefer that you come to me if ever you want to trade V75 or Nasdaq. One of the two, I prefer those two than anything else. However, I'm open to other options, but my preference, as it says here, Visa and 5 and Nasdaq. So, and then after I joined, this is what you get: the previous Zoom recordings, then Vego trading PDFs. I have my own PDFs that I compiled. It is not a copy trade from someone else. It's what I realized in the market. All right, so the payment options to join my mentorship, you can pay via Bitcoin or PayPal or Skrill. And then if you are in South Africa, Strictly here, no exceptions. You need to use the FNB account if you are in South Africa. So, but anywhere else in the country, you can use the Bitcoin, PayPal, or Skrill. But for you guys here in South Africa and in SADC, in short, you need to use the FNB account unless your country does not allow forex. Then I will understand that. But in South Africa, trading is allowed, strictly FNB. So when you join here, the V75 analysis, we analyze this thing each and every week. All right, we analyze this thing each and every week, and then on Nasdaq, once we should it happen that we hit a stop loss, is either on V75 or on Nasdaq. Should it happen? Let me emphasize on that. Should it happen? We reanalyze everything top down again. All right, because we don't have to build on something that is collapsing. No, we start afresh, so we analyze everything. So every Tuesday or Wednesday we have one Zoom session, all right, with everyone. So yeah, this is what you get guys. So the previous Zoom recordings, they're so important because some of the colleagues might ask some questions that you are not aware of or that you wanted to ask as well, but you forgot on our 101. So it's important to watch those, and then the PDFs. It's important also to read them and relate to what I just showed you now. So I have this um, 2-page PDF. It's only 2 pages. 2-page PDF is so powerful. Like, it's so powerful, guys. Like, yeah. It's so powerful. I don't know if I'm saying that simply because it was written by me or what. It's only 2 pages. It is so powerful. It it has everything that we did here. So this video now is at 52 minutes, while that PDF is only 2 pages. Within 2 minutes you are done. You just have to implement everything. Simple as that. Simple, straight to the point. And is the diagrams. As the important thing, you see that on sell, this what happens, on buy, this what happens, but on this time frame, this what you do, this what you do. So this is all this is happening on the mentorship channel. So that PDF, please do not ask for it. It is not for free. It's only for those who are on the mentorship channel. So guys, please do subscribe. And then while we are still here, guys, I have some good news. As you can see, my subscription fee is $500, but now we are on Easter. So my our religion is Christianity. So now we are on Easter mood. We are on giving a spray. So now I'm taking down $100 from the $500. So my joining fee up until the Easter Monday. All right, up until the Easter Monday, I'm taking down $100, so that will be $400. In South Africa, this will be 6,000 rands. That will be 6,000 rands, the $400. And in other countries, I don't know. Unfortunately, you have to convert it yourself to your currency. So in South Africa, that will be 6,000 rands until only the Easter Monday. All right, I'm taking down $100, which is 20% of this. All right, so if ever you want to join on the $400 spring, please text me on Telegram. My link will be on the description below, and then just type the ES21. Okay, ES21, and then I'll give you the banking details of either of these. Is either the link of 123 or the account number here. Just ES21. So I'm taking off 20% only up until the Easter weekend, and then after that is back to normal price. So colleagues, Thank you so much for watching this video. I hope whatever I shared here, it is worth of your time, and tell others to subscribe as well. We'll meet again very soon. Njabulo here. Sharp.